Hello everyone, welcome back to our channel. Today, we're going to delve into a topic that's on everyone's mind as we approach the holiday season, the economy. We'll be discussing the recent surge in holiday spending, its potential impact on the economy in 2024, and the concerns about inflation and recession. But don't worry, it's not all doom and gloom. We'll also be looking at some optimistic outlooks on consumer confidence. And of course, we'll provide you with some tips to navigate holiday shopping during these uncertain economic times. So let's get started. Don't forget to subscribe. The recent surge in holiday spending. The holiday season has always been a critical time for the economy, with consumers often increasing their spending on gifts, travel, and entertainment. In 2023, this trend was no different, and we saw a significant surge in holiday spending. Despite the ongoing cost of living crisis, consumers were on the hunt for deals this holiday season. Data from over 24 million UK bank accounts showed a 27% year-on-year increase in package holiday bookings. This indicates that consumers were seeking out cheaper alternatives for holidays. In the United States, about 43% of shoppers claimed they would spend more on holiday purchases than they did the previous year. Many of these survey respondents cited inflation as the reason why they would be spending more than usual. Interestingly, holiday sales rose by a staggering 10.3% in 2020, and in 2021, we saw the largest increase in current dollar holiday sales on record, with a 12.6% surge. However, in 2023, consumer holiday spending showed a pullback after the huge surge in pent-up demand and revenge spending, combined with pandemic-era government assistance programs. This increase in spending was primarily driven by higher-income households for lower-income households. The holiday season tends to add pressure on household budgets that have already been stretched by rising costs. Overall, the recent surge in holiday spending is a complex phenomenon, influenced by a variety of factors including inflation, income levels, and consumer confidence. As we move into 2024, it will be interesting to see how this trend evolves and what impact it will have on the economy. Potential impact on the economy in 2024. As we look ahead to 2024, there are several key factors that could shape the economic landscape. Firstly, economic growth is likely to decelerate in 2024 as the effects of monetary policy take a broader toll and post-pandemic tailwinds fade. We expect real GDP growth to walk the line between a slight expansion and contraction for much of next year, also known as a soft landing. After tracking to a better-than-expected 2.8% real GDP growth in 2023, we forecast a below-trend 0.7% pace of expansion in 2024. Among the major components of GDP, consumer spending is likely to rise at a more muted pace next year, while fiscal spending could swing from a positive contributor in 2023 to a modest drag. Notable drops in business investment and housing activity in 2023 set the foundation for improved performance in 2024, even if the outlook remains muted amid higher interest rates. Secondly, the U.S. Federal Reserve is expected to hold the Fed funds at 5.25% to 5.5% until the middle of 2024. If inflation continues its moderating trajectory over the coming quarters, it is likely the FOMC will start to slowly normalize policy rates near the midpoint of next year. We forecast 25 BPS cuts at each meeting beginning in June, bringing the Fed funds target range to 4.00% to 4.25% at the end of 2024. Thirdly, the U.S. consumer could begin to bend, but not break. There are numerous reasons to expect consumer spending growth to slow next year from its firm pace in 2023. Diminished excess savings, plateauing wage gains, low savings rates, and less pent-up demand. Additionally, the restart of student loan payments and uptick in subprime auto and millennial credit card delinquencies are emerging signs of stress for some consumers. On the flip side, household balance sheets and debt servicing levels remain healthy. Lastly, the larger-than-expected fiscal boost to the U.S. economy in 2023 could flip to a slight headwind in 2024. The fiscal deficit roughly doubled to $1.84 trillion, 7.4% of GDP, in fiscal 2023 from $950 billion in 2022. Looking to 2024, we expect the federal deficit to narrow to a still very large 5.9% of GDP, reflecting a bit of belt-tightening on the spending side, partly offset by higher interest outlays on government debt. In conclusion, while there are several challenges that could potentially impact the economy in 2024, there are also several reasons to be optimistic. As always, the key to navigating these uncertain times is to stay informed and prepared. Concerns about inflation and recession. Inflation and recession are two economic phenomena that have been at the forefront of many discussions recently. Let's delve into these concepts and understand why they are a cause for concern. Inflation is a measure of the gradual, broad increase in prices throughout the economy. It's usually expressed as a percentage, representing the rate at which the cost of goods and services have increased over the last year. A minimal level of inflation is expected and even encouraged. But it becomes a problem if the inflation rate gets too high. Excessive inflation can severely impact the economy, making everyday essentials much more expensive. As prices rise, consumers have less money to spend on goods and services, which can slow down economic growth and potentially lead to higher unemployment. There are several factors that cause inflation. Cost-push inflation happens when the prices for the key inputs of goods and services rise, such as raw materials and labor. When companies have to pay much more for inputs, they pass on the cost to consumers in the form of higher prices. Demand pull inflation occurs when there is too much money and demand chasing too few goods. It can be caused by increased government spending or a tax cut that puts more money into people's pockets. When there is more demand for goods than supply, prices will go up. A recession, on the other hand, is an economic downturn, typically defined as 2 consecutive quarters of declining gross domestic product (GDP) growth. High inflation rates can indicate an impending recession as businesses react to higher costs. The tension between growth and inflation continues to challenge the Federal Reserve. The U.S. 10-year minus 2-year Treasury yield spread has been inverted since July 2022, which is typically indicative of a recession within 12 months. Optimistic outlooks on consumer confidence. Consumer confidence is a key economic indicator, reflecting consumers' attitudes and buying intentions. It's a measure of how optimistic or pessimistic consumers are about the economy's health. Despite the economic challenges we've discussed, there are several reasons to be optimistic about consumer confidence. Firstly, global consumer confidence soared to record heights in the first quarter of 2021. This surge in confidence was driven by broadening vaccination campaigns, loosening travel restrictions, and continued economic stimulus from governments and central banks. Confidence rose in 49 of 65 markets surveyed, indicating a revival of economic activity and an expansion of vaccine development and distribution. Secondly, consumers were significantly more optimistic. Thirdly, sentiment about job prospects and spending intentions also trended upward. Consumers around the globe were more optimistic about their job prospects, and spending intentions flipped from negative in Q4 2020 to positive in Q1 2021. Lastly, despite the uncertainty surrounding the COVID-19 pandemic, consumer confidence increased in the fourth quarter of 2020. This increase was driven largely by an improved outlook for personal finances, reflecting unprecedented fiscal measures in response to COVID-19. In conclusion, while there are valid concerns about inflation and recession, there are also optimistic outlooks on consumer confidence. These positive trends provide a glimmer of hope for the economy as we navigate these uncertain times. Tips for navigating holiday shopping during economic uncertainty. Navigating holiday shopping during economic uncertainty can be challenging. However, with a little planning and some savvy strategies, you can make the most of your holiday shopping experience. Here are some tips to help you navigate this season. Start early. Don't wait until the last minute. Getting an early start on holiday shopping will ultimately save you money. It's the best way to avoid last-minute overspending and impulse buying. With supply chain issues making some products scarce this year, waiting too long to start shopping can lead to going over budget. Create a retailer-only email address. Create a second email address that's specifically for sharing with retailers for updates on discounts and deals. This way, you can keep track of all the deals without cluttering your personal inbox. Price match. Many retailers will often match the competition's prices when you present them with clear proof of a competitor's lower pricing. If you find a lower price at another store, simply bring the proof of pricing, such as a printed ad, into the store you prefer, and there's a reasonably good chance that it will match it. Look for value. Given economic uncertainty, consumers are being more surgical about how they spend. Nearly half of U.S. survey respondents say they would switch stores if they found a better price elsewhere. So, don't hesitate to compare prices and look for the best deals. Plan your purchases. Make a list before heading to the store so you can shop as quickly as possible. This will help you stay focused and avoid unnecessary purchases. Support local businesses. Consider shopping at local businesses. Not only will you be supporting your local economy, but you may also find unique gifts that aren't available at larger retailers. Remember, the key to navigating holiday shopping during economic uncertainty is to stay informed, plan ahead, and shop smart. Happy shopping! That's all for today's discussion. Remember, while the economy may seem uncertain, being informed and prepared can help you navigate this holiday season with confidence. Don't forget to like, share, and subscribe for more insightful discussions. Until next time, stay safe and happy shopping.